We now have the least affordable housing market in the last 16 years. In contrast, though, current homeowners have gained a record $1.2 trillion in tappable equity in Q1 of 2022. This is according to a new report from Black Knight that I'm going to be sharing with you guys today. So with that said, let's go ahead and dive right into the video. And of course, consider subscribing if you haven't done so already. I post the latest housing market trends so you can make a more informed decision about whether you should buy or sell a house. So with that said, let's go ahead and dive right in. I have a lot of information to share with you guys today. So here's the report here. This was published on the 6th of June, and this covers April's housing market and also into May as well. However, though, I'm going to be sharing some more recent trends as well in our housing market, so you can be more informed here. It says U.S. home prices are up 42% since the start of this pandemic, with the average price house gaining almost 9% in value just since the start of 2022. That's absolutely mind-blowing. In basically 5 months, current homeowners on average have gained 9% more in their home values, and we're only halfway through the year. This is pretty astonishing because historically speaking, it's more normal to have a home price gain for 12 months in the range of 3 to 6 months for the entire year, not for a 9% gain in practically 5 months. And of course, because home prices increase so much, and also we're seeing a big increase in mortgage rates, right now current mortgage rates are in the range of 5 to 6%. At the beginning of this year, we were at 3.3%. So absolutely insane. That's one reason why the monthly mortgage payment on the average price home with 20% down payment is up $600 more per month. That's a gain of 44%. More than it was at the start of this year. So at the start of this year, if you were to buy the average price home compared to now, you're going to be paying $600 more per month in just principal and interest only payments. That excludes property taxes, of course. Also, if we compare that to the start of this pandemic, you're going to be paying $865 more per month to buy basically the same house compared to the start of this pandemic. And that's a 79% increase. Also, as of May 19th of this year, the average 30-year is at 5.25%, the average 30-year fixed rate mortgage. And because of that, the share of the income that's required to make this average home payment here has climbed 33.7%, just shy of the 34.1% record high we saw in July of 2006. However, though, this is as of May 19th. And as you guys all know, mortgage rates have increased greatly. So as of May 19th, let me just share some data with you guys. So around May 19th, average rates were approximately 5.38 to approximately 5.25%. But as you guys can see here, ever since May 27th of this year, by the way, this is according to the Mortgage News Daily, rates have shot up greatly from 5.25% to now over 5.8% at the time of this video, which is the 12th of June. Therefore, going back to this report from Black Knight, I believe at the time of this video, we have reached all-time record highs for the income that's required to make the average mortgage payment in the US right now. This is because mortgage rates and also home prices have increased since May 19th, and also mortgage rates are far higher than 5.25%. So this number right here at 33.7% should have been surpassed this 34.1% record high right now. So in other words, what we're seeing right now is that prospective home buyers are really getting hit hard right now with inflation, rising home prices, and of course, rising mortgage rates. And this is causing a housing affordability crisis. In stark contrast though, current homeowners or people who have mortgages right now have gained $2.8 trillion in tappable equity over the past 12 months. And as it says here, while rising home prices and volatile mortgage rates continue to compound the affordability pressures in this housing market for would-be homebuyers, the same dynamics have also served to increase the housing wealth of American mortgage holders by a significant margin. And according to Black Knight, tappable equity, which is defined by the amount available for homeowners to borrow against while still retaining a 20% equity stake in their houses, has reached yet another all-time high. It goes on to say the following in this report here. Home price growth cooled, albeit very slightly, in April this year. While a downward shift from 20.4 to 19.9% annual growth is hardly cause for concern, it's also likely we have not yet seen the full impact of recent rate increases. So they're talking about home prices increase in April, but that's really what the market was like back in March and also the last half of February, when mortgage rates were much, much less. And you can see this very slight slowing trend in home prices on Redfin's website here. So for the 4 weeks ending April 3rd, which is basically covering March's data, home prices increased 16% year over year. But when you have a look at this though, when we look at April's data, we have also increased by 16% as well. But the most recent data we have right now, which is for the 4 weeks ending June 5th, which is basically May's data, is for a 15% year over year increase in home prices. In any case, going back to the report here, the monthly P&I payment, which of course is principal and interest payment, required for the average home purchase is up nearly $600 since the start of this year. And this is now very close to all-time record lows for housing affordability seen at the peak of this market in 2006. And it says even modest increases in either rates or home prices at this point would push us over that line. In other words, since home prices and also mortgage rates have been increasing ever since then, we should be reaching all-time record lows for housing affordability right now. But it says there's another side to the story though. With the average price home up nearly 42% in value since the start of this pandemic, current homeowners with mortgages are sitting on average with $207,000 in equity that they could choose to tap while still keeping at least 20% equity in their houses. That's a result of an astonishing 1.2 trillion gain in tappable equity in the first quarter of 2022 alone, the largest such quarterly growth ever recorded. In total, American mortgage holders have more than $11 trillion in tappable equity, also an all-time high. So basically we have a very interesting landscape right now, sad to say. Would-be home buyers or people looking to buy a house are facing affordability challenges right now because of a lack of affordability. In stark contrast though, for those who do own a house or have been homeowners over the past several years, we're seeing a substantial rise in wealth because of rising home prices. And it says here, depending on where you stand, whether you're a homeowner or a renter, this could be the best or worst of all possible markets. Also, according to Black Knight, another contributing factor for home price growth and affordability challenges is record for sale inventories. In other words, a lack of houses for sale in the United States. So as of March, active listings or housing inventory still remain 67% below pre-pandemic levels. However, here's the most recent stats according to altosresearch.com. That's altosresearch.com. They have a really good YouTube channel, by the way, if you're looking for current housing market trends across the United States. Altos Research has a great YouTube page. In any case, here's their most recent stats they have for housing inventory across the United States. So right now we have approximately 375,000 houses for sale, and that's a 7-day moving average as of June 3rd of this year. Compare that to 1 year ago, we're actually above last year's levels. So 1 year ago, we were at approximately 330,000 houses for sale. Now again, we're at 375,000. However, though, look at 2020 though. This time in 2020, we had approximately 705,000 houses for sale, about half compared to right now. Also look at pre-COVID. This time in 2019 approximately, we had 950,000 houses for sale compared to 375,000 right now. Also, Black Knight notes that we have 820,000 fewer houses for sale than we should have at this time of year. Also, the number of new listings, which is a measure of home sellers listing their houses for sale, that's only up 1% from the same time 1 year ago, but still remained 11% below pre-pandemic levels for the month of April. This, of course, suggests that the number of houses hitting the market remains well below what would be considered a normal level. And you can see this trend for the number of new listings on Redfin's website here. So basically for the month of April, we were down 4.6% in the number of new listings compared to 1 year ago. But as you guys can see here, the number of new listings is basically on par right now with 2019 as well as 2021. We're only down 1% compared to 2021 right now. And Black Knight goes on to say the following here. The continued lack of supply continues to weigh on home sales and keep prices higher than they might otherwise be given current affordability metrics. In recent years, a 20.5% payment to income ratio has been a rough tipping point at which appreciation or home price gains begin to soften. But given the severity of inventory shortages, home prices continue to rise, even as that ratio has climbed to 33.7%, just shy of the all-time record high of 34.1% that we saw in July of 2006. So to summarize this video here, because we're seeing a big increase in home prices and of course a giant increase in mortgage rates, an increase of about 2.5 percentage points this year alone, this is causing affordability challenges for would-be homebuyers. In stark contrast though, homeowners are really getting the upper hand here because they're gaining $2.8 trillion in equity over the past 12 months. But what's your biggest takeaways from today's video? Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.